So I'm definitely at the right conference, and I've got the right audience. So great to see we have curiosity, we have excitement, and we're also trying to figure out what this really means. It was very different when I did this for a bunch of tax consultants 2 months ago. So I'm very pleased about the excitement and the curiosity. The plan today is for me to go through a panel. Just before I invite the panel, I'll share some thoughts for about 10 minutes, and then have the panel over so we can go through a session, and you have an opportunity to ask the panel a question too. So it would be remiss of me not to start with Stephen Hawkins and mention him. His pursuit of knowledge, despite the considerable challenges he faced, is a testament to the man and really an inspiration to all of us. And as we come into this session, I think it's especially useful for us to think about the impact of science and technology to the future. If I just start with this curve, which a lot of you have seen, essentially there's sort of two takeaways on this. One, things are accelerating quite fast, and things that you thought were emerging trends or next gen 5 years ago are either embedded or being made obsolete. So what we'll see is a lot of this is increasing. Not all of it, but there's clearly a general trend around this. We get asked the question a lot about what is AI, and I saw that education is part of the audience's curiosity. I want to make it really simple. So for the purists in the room, I apologize, but really it is about a simple, useful definition for business. I think of it as the ability of computers to perform tasks that we would normally think as intelligent in humans. Not everything humans do is intelligent, but would normally think of intelligence as humans. And what do I mean by that? There's two things to it. You're able to extend what humans can do. So either process data quicker, faster, get better insights, or the second bit is to extract concepts, meanings, learnings, and more importantly, interact with humans in a natural way. So that's a real sort of one-page definition of what I think of as AI. Does it really matter? And who cares? Well, it's really interesting. If you look at the market analysis being done, the message is clear and consistent. AI will have a significant impact on businesses. If you look at the graph on the left-hand side, what it's looking at is the current AI adoption on one axis and the estimated sort of trajectory in AI demand. In both instances, financial services is in the top right. And that's really important, especially for a conference like this. You can see financial services have about a 30% adoption rate with double-digit demand coming through. However, it doesn't mean that we've got it right. In fact, in lots of instances, there's a lot to learn from the retailers or the media companies, particularly around customer needs, customer propositions, and how quickly you adapt to that. It's something we see more financial service institutions looking to do. On the right-hand side, we have the recent survey that we carried out, and you look at, it was amongst the execs in UK companies, AI was the topmost technology expected to disrupt. If you add it with data analytics, it was over 50%. Right, so what do we mean and what do we think about this? So bear with me as I talk you through this. If we start from the left to right, essentially what we're looking at is help understand the business challenge or the opportunity. That's really where you've got to start. And we'll spend some time with the panel discussing about scaling AI and what that looks like. But essentially, if you start with understanding the opportunities, the three aspects that have made this really, really powerful today is the exponential growth of data, the volume, the variety, the frequency. Smarter algorithms. You look at machine learning and look how quickly it's developing. Faster processing speeds. Cloud computing is cheaper, faster, more accessible. You've got the big tech companies investing billions in research and development. If you've got the right opportunity and you've got the right tools, you should be able to get smarter insights. On the other side, what you have is an evolving ecosystem. So you've got lots of AI players, cognitive technologies coming out, and if you're able to put the two together, and this is where humans and machines are able to hit a sweet spot, you are then able to what we call the cognitive advantage. And the cognitive advantage isn't just about the new stuff, it's also about doing the basic stuff well. Your core operations, how do you change those? It's about looking at user experience. It's about looking at decision making. In our experience as we go through this, and I'm going to rattle through this quickly, what we see is there are three aspects people are trying to look at from a business capability perspective. They're either trying to automate processes, or they're trying to gain better insights, or they're trying to engage with their customers or employees in a different way. So if we look at the first one around process automation, I'm not going to talk about RPA. I know you've all heard it. But what we're seeing is more intelligent automation. We're seeing automation around, looking at how do you replace lost credit cards? How do you look at reconciliations and all that? The second aspect is now where it gets a bit more exciting. What you're looking at is to gain insights from using smarter algorithms, lots of data, to really interpret the meaning. And this is about predicting what your customers are going to do. Can I spot my next mortgage application 6 months before they make the application? Can I think about what's the right way to interact with somebody and at what point, given their previous spending patterns? Can I use better insights for more sophisticated pricing? And then, of course, the third aspect of this is how do you engage? A lot of this engagement, people think about NLPs, chatbots, intelligent automation. It is important because we can see that, and a lot of companies try it with their employees first. I think one thing that's becoming clear is personalized service does not mean human service, and we're seeing that. And I'll bring this to life. So, by the way, one of the key points about automation is you've got to be careful what you automate. I always use the example of trying to build the M4 corridor, and you end up tarmacking the footpath. So you've got to be really careful how you think about your business process and your business transformation. If you look at a company like Vanguard, Vanguard's got a personal advisory services, which has about 80 billion of assets under management. And it's really interesting. It is a combination of human and machine, where the machine does the portfolio rebalancing, tax minimization, the reconciliations. And what the human's doing is thinking about the investment goals, the behavioral analysis, the human touch. And actually the two of that has seen a massive growth, which for the consumer is more choice at a better price point. We carried out a cognitive survey very recently, and I think the two takeaways from this that I would see is over 3/4 expect there to be a significant change in less than 3 years. Secondly, and we'll come to the whole thing about the impact on the workforce, most people see this in the short term as creating jobs, but also the requirement to reskill. The jobs that are going to get disrupted are the ones that are mainly around outsourcing or very manual automation tasks. How is it being employed in practice? So I know this is fintech, but sometimes it does help to learn from other industries. So if you think about the trucking industry, the use of predictive and AI models around warranty costs and the significant cost saving. If you think about airlines, it's about personal service, customized service. If you think about a global property insurer, which I've been working with, it's actually using AI to get better insight around commercial property underwriting. Whether that means better risk assessment, enhanced proposition with the broker and the customer, but also where you could send risk engineers to 10% of your portfolio, you're now covering 100% of your portfolio. What does it mean for the workforce? Now, that's a question we get asked very often. I think it's fair to say it's going to be technical skills plus plus. Plus plus is a common word these days. I think we're looking at technical skills plus social skills, emotional skills, looking at creativity, and also emotional intelligence. If you look at the UK, it's predicted by 2030 there'll be about 4.5 million new jobs created. Now, that is a challenge both for the public and the private sector, and hopefully is one that we'll talk about on our panel. If you ask people what they think, I think it's fair to say right now people think there'll be less disruption. But if you look at if you ask the folks to project where they are 10 years from today, there's probably more people thinking that there'll be job creation than job loss. Before I go, I want to leave you with, before I go and call the panel, I want to talk about 10 breakthrough technologies in 2018. This was in the MIT Technology Review that came out a few days ago. Useful to us. So 3D metal printing, right? It's happening. The impact on manufacturing and supply chain is there. What does that mean for a bank that has a significant trade finance book? AI for everybody. Again, a big theme around making it cheaper, more accessible, faster. You've got Google, and we're very lucky to have a Google panelist with TensorFlow. It's got GCP and has added Cloud AutoML. You've got Amazon with AWS. You've got Microsoft with Azure. But you've also got new startups, significant startups on the west coast of the US. This is going to have a big impact on what's happening. Barbell fish buzz, instant translation in your ear. Artificial embryos. Now that clearly is going to be from stem cells. But there's a big debate around the ethics of this and the advancement of science. Believe it or not, dueling neural networks. Just when we thought we were understanding neural nets, we now have two neural nets against each other in what's called GANs, generative adversarial networks. It's going to increase AI imagination. Sensing city. Lots of cities in the world looking at this, including Canada and China. Zero carbon natural gas. Perfect online privacy. So the proof without the underlying information. Fortune telling, genetic fortune telling. Advancements in science. Does that lead to genetic discrimination or health advances? And also materials quantum leap. With quantum computing coming in, you're able to analyze molecules in a very granular fashion, and that enables you to think about materials, designing, and lots of other impacts. Right. Hopefully there's a quick 10-minute canter. I'll ask you now, just as I introduce the panel, to ask what question would you like most to hear from our panel? Thank you. So if I invite the panel members, we have Christine Foster, who's the Managing Director for Innovation at the Alan Turing Institute, a well-renowned institute that looks to bring data science and business together. Thank you, Christine. We've got Kirill, who is from Google, a customer engineer from Google, who has been spending a lot of time thinking about AI and the cloud. 5 years at Google, which for most of us is 30 years in our normal jobs. We got Jesse McWaters, who is from the financial innovation lead for the World Economic Forum. And we've got Satadru Sengupta, who is from DataRobot, which looks at making AI platforms accessible to lots of businesses. Please give my panel a big warm applause. Thank you. So, Jesse, if I may, I'll start off with you.
Sure.
Given you've just come through the WEF and the Davos meetings, what do you see as the main innovations in the finance space in financial institutions and the impact this is going to have?
So, I think it's a little bit odd the way that people talk about AI right now, and I think it mirrors in a lot of ways the way that we were talking about blockchain a couple of years ago. There's this tendency to anthropomorphize it, and it's like it's this external force, and someday AI is going to break into your bank overnight, and it's going to come in, and when you turn on the lights in the morning, oh, man, we don't need 50% of our staff anymore, everything's changed. And I think this is kind of a fantastical way of looking at AI, and it overlooks a lot of the hard and not always terribly glamorous work that needs to be done in order to enable AI. There are huge barriers that need to be overcome in terms of data sanitization, data integration, integration both within the bank and with external parties. And I think that that stuff is really important to get started on now, because it's what's ultimately going to enable you to do not just the near-term things, not just the how can we figure out how to run this process faster and cheaper, what we might call automation, and to be able to do more sophisticated things like reinvent processes, reinvent products to deliver new types of value, to reduce risk and be more accurate, and even really to reinvent business models entirely, thinking about things like lenders that don't have any preset product shelf, or insurers that protect against risks ever happening rather than just providing cover against those risks.
Okay. Kirill, given your background at Google, I'm sure a lot of us are interested to understand the approach you take to AI, at least what your experience has been, and how you see the evolution of AI at Google and how it looks at financial services in particular.
Sure. So at Google, we've seen exactly what Jesse has described. So there was no such thing as AI will come in and just fix everything. It was a really long process of understanding your data and understanding what you actually want to do with it. So it started in the early 2000s when we realized that if you want to index the entire internet to make it searchable, then you need some kind of new technology to actually go and achieve that. And that's how a paper on MapReduce was born in 2004, and that gave birth to the whole Hadoop ecosystem. And internally, it started this kind of inquisitive journey at Google where people would go and create their own data pipelines, trying to understand what data they can handle. And then that kind of moved towards a more intelligent approach. So rather than just applying some algorithms to that data, you would create a machine learning model that would take that data and process it. So as a result, after many years of that transformation, we've published a bunch of papers on not just AI and machine learning, but actually what to do with that data, how to build data pipelines, how to analyze it, and how to do it in a massively scalable way. So once that data bit was handled, we could actually move into machine learning and do something useful with that data. So for us, it was really a matter of having the right cause and having the objective and putting the data that we have into that objective. So that comes perfectly to your point where you said, you need the data, you need the algorithms, but you also need the massive amounts of compute. So that's how we achieved what we've achieved at Google. And if you are aware, I'm sure you are, that most of our products actually have artificial intelligence embedded in them, whether we're talking about Google Search or we're talking about recommendation engines, we're talking about photos, etc. And then at some point we started externalizing that technology through things like Apache Millwheel, Apache Beam for analyzing the data and moving it around, but also TensorFlow, which has become one of the most popular machine learning frameworks. So with that in mind, we didn't really create anything specific to the fintech industry, but we did create a framework that can be used by pretty much anybody. And we've seen a lot of traction from fintechs in particular. Some of the use cases are, really fast calculations of risk and all sorts of rates, but also really exciting stuff like fraud detection, for example. So we see a lot of traction there, and it's great to see that some of our technologies actually can be used outside of Google and that they're universal and applicable to other industries.
I think it's fair to say one of the things that has enabled the explosion of fintechs has been the cloud technology and the AI computing available. I'm going to just stand up so I make sure I'm reading this question right, because it's quite tough from where I'm sitting. And we seem to have a question around ethical challenges represented by AI. We had a debate about this as we sat before we came on stage. Anyone wants to take that question?
What is the question exactly? Sorry, can't see it either.
How do you navigate the ethical challenges presented by AI?
I'm happy to jump in on issues of regulation, but I think regulation and ethics are not necessarily the same thing. I mean, I think that it's really clear that in this space, uncertainty vis-a-vis regulation is a concern for financial institutions, and it is, to a degree, has the potential to have a chilling effect in this space. I think that we're shifting from a world in which intent is really important. If you think about how regulation around collusion exists today, there's definitely factors of intent considered there. There are issues of scale, wherein taking a single code base and sort of deploying that to your entire customer group puts you at risk of a linear scaling of fines that makes people very uncomfortable. And then, of course, there's this question of interpretability. I actually think that's a little bit overblown, but I think it does force us to ask the question of when is interpretability important in financial services, and how do we manage those questions of interpretability when models are not easily interpretable?
Yeah, only one thing I would be adding with that is that oftentimes we make the mistake that interpretability and transparency is just a concern for regulated industry, or when we do have overarching regulations like GDPR, but it is not actually. If we want to bring technology, we have to bring it with a transparent way, because in an organization we have technology, we have people, and we have operations. So we have to have in the AI a storytelling capability that will tell us that what it is exactly doing. If it is making hundreds of predictions, like what are the algorithms like generating that predictions, what is behind these predictions. One common thing that we do is known as reason codes. And reason codes tells us that not only 80% chance that this transaction will be fraudulent, but also why the chance is 80%, not 20%. These are the top reasons behind that 80% predictions. So those things, and including everyone, is an extremely important component. So machine learning traditionally happens at the corner of the organization. It does not involve end users, underwriters, people with or without mathematical background. So that has to change. When everyone would be involved, people would be raising questions. There would be a healthy skepticism, healthy conversation and conflicts that will make sure everyone is no one is crossing the red lines. But none of these issues are new though. Like I remember that 10 years ago when I was at Liberty Mutual Insurance, that we tried to include zip code in our predictive model, and that created a whole lot of problems. So we have to be very careful that we are not discriminating people based on their location of staying and etc. So none of these are new. It is just coming in with the newer technologies.
And as the Turing, we often think about regulatory as just being the first step, right? So we think about kind of getting beyond just compliance into the truly ethical questions about the uses of this, this technology. And as everybody here knows, technology is neutral, right? Prior speakers have said it as well. It's how we use it that matters. And so in particular, we're leading various pieces of research as well as interest groups around the ethical uses all across what I think you would call probably the data and analytics and AI value chain, if you will. So all the way from the way the data is collected to the permissions and the way the algorithms are built. And so we have a few different operational ways that we live and breathe this every day. So quite simply, we run a research institute. So it means that all of our research projects are run through an ethical review, just as you'd expect wet bench scientists, biologists to run through an ethical review before they work on something. We do the very same, taking data from businesses, taking use cases from businesses, partnering with businesses. Those can sometimes have their challenges for a research institute, and so we're sure to run it all through an ethical review before we take anything on, any collaboration. And that's just the practical day-to-day. But then also, we find it's not enough to have a framework on the ethics and thinkers and speakers talking about, here's kind of the theoretical framework around it. That's a starting point. But actually, we have a community of multidisciplinary researchers who are very interested in the use cases. So, in kind of practical business terms, you've collected some information, you're running machine algorithm, and you're not sure if it's having unintended consequences. And how do you discuss issues of transparency, fairness, explainability without the specifics? And we would say that you can't. That it absolutely matters, the scale of the decision, again, whether it's being shown a particular, a pair of shoes or being granted a loan. I think everybody here can intuitively understand the stakes are very different. And so we look at it in the specific instance and really needs to be examined case by case.
I mean, it's fair to say from what I'm seeing working with our clients, it's becoming more of an issue at the board level. So we do get lots of our non-execs and being asking these questions. I think there's two other aspects. One is training the data, making sure the data set that's being trained on is actually diverse. Because we were having this instance where we're looking at attracting new talent in the recruitment space, and they looked at everybody they'd attracted in the last 20 years and was, lo and behold, found out they weren't attracting different people. It's because the data was trained in a different way. And I think the second aspect also is having diversity in data scientists. And we're seeing more of that, and we'll pick that through the talent and talent questions.
And I think I'll just add on to that. I think having some notion of data provenance is really important. I think that those who have worked in the bowels of financial institutions know that the data that's in there isn't always as clean as we'd like it to be, and the process of integrating the data can often introduce all sorts of other challenges. And so I think understanding those underlying problems, particularly as they exist within financial institutions living in this highly regulated environment, is really critical.
Christine, can I ask you a question around the UK and the role of the Alan Turing Institute and how you're looking to connect academia with industry and where you see the biggest opportunity in the current geopolitical climate to help the UK be even more successful?
Big question. Big challenge, too. So the UK is building on some great strengths. We talk about it here, fintech, right? So financial services, knowledge sector work, technology, and so on and so forth. And also the big challenge that everybody knows about, the productivity challenge in the workforce. And so it's a particularly exciting time with the introduction of artificial intelligence as a way of supporting data-driven decision-making by people, by employees, by workers, to see a step change in the productivity of the workforce. And so one of the areas that the Turing Institute is leading in is pulling together government, businesses, researchers, the third sector, to really address this. And so a couple of areas of work, again, really specifically, we rely on our research roots. So there are many, many examples of technologies. Economists call them general purpose technologies, GPTs, like electricity, like a combustion engine, that on their own didn't show the economic benefit. But actually, when they were connected and locked in to other technologies, then you finally saw it, right? So you can imagine all sorts of instances that are just intuitive now. And it will be a similar pattern we expect with AI. And so we have a piece of work around technology and labor markets, right? A piece of work around understanding the economy better. So even in our field of economic research, the ability to shine a light on the economy and understand what's happening at a much more granular level, much more quickly, really changes from where we were before with kind of national survey statistics and samples when you think about AI and all the rest. But yeah, like I said, the Turing is really about convening all those aspects to make the UK the best data regime, the best research regime, the best regulatory, ethical regime, the best place to do cutting-edge AI work, regardless of the type of institution that you're coming from.
Okay. Satadru, given you work in the field of actually making AI accessible to businesses, your background in insurance, where do you see some of the examples of real business value being added and some of the challenges that financial institutions, particularly the more mature ones, are facing as they look to adopt AI technologies?
Absolutely, Gurpreet. So I'll be, yes, that's true. Like at DataRobot, what we really do, we call general purpose machine learning platform. Why it is general purpose? Because you can use the platform to solve problem across industries. And if you take a single industry, you can use the platform to solve function across different functions, right? So that gives us a very good perspective. Before I give an example, let's first iterate once again. Gurpreet covered that very well, that why we need AI, right? So if we really think about the problem, Daniel Kahneman, behavioral economist, Nobel laureate from 2002 or maybe 6, I forgot. He actually mentioned that every organization is a factory of decision making. Every single day, they make hundreds and thousands of decisions, right? But human being, people like us, when we make decision, we are influenced by emotion, we are influenced by mood, and many other things. Like if my flight is late, I'll be making a different decision if I have a really smooth journey, and etc. So AI has 3 advantages over human. Number 1, it is fast. Number 2, it is emotionless. And number 3, it can actually process enormous amount of data, different kind of data that we cannot actually possibly process, right? So this is the advantage. And with that advantage, what people are doing really, they're utilizing this technology to really help them to make those decisions in a much more accurate way, much more in an objective way, in a data-driven way, in an evidence-based way, right? So human beings are still making decisions, we'll be making decisions going forward, but we are taking this technology and really helping ourselves to change those decisions in a very accurate way. So that's kind of the reasons why we need this. And I will be giving a particular fintech example from Zidisha, which is a microfinance institute working on Africa. So what they really do, they they collect money, or they are actually accumulating money from different part of the world, and you can give them £30 or $30. That money will mean a lot to the people in Northern Africa and things like that. And also in India, I am involved with an organization called Kiva. And so for them, it is enormously important to build a good credit score model, because it is really important that the money they are lending to people, that money is going to come back in 3 months or 6 months, because they do not have a huge budget. They cannot have a loss because people are not returning money, right? But if they return money, then they can actually relend that money in perpetuity. That's a huge advantage. But that's a small company, so they have to really build an AI system now that will tell them that this particular person will return the money. So a simple credit scoring model or lending model. And of course, all of us know that if we talk about Berkeley or any other companies like Capital One in US, like all of these people are actually building this credit score model. So this is a very good example of understanding credit risk, like using AI. Similarly, you can apply AI in marketing, of course, and you can apply AI in fraud analytics. That's a tremendously big component of AI application. So in insurance, United States lost $80 billion in 2016 in fraud-related claims, just in one sector, property casualty, nothing else. And that is also declared fraud. There are a lot of fraud that we do not even capture. So that's the kind of the the materiality of the problem. So that's kind of where the applications are. So marketing, risk analysis, fraud analytics, the applications are really, really deep. Even we see applications in audit these days, like really understanding if there is any employee misconduct. Quite a bit of time that happen in the agency system involved. If you have a kind of a incentive system that may change people's behavior, you can apply AI to detect those early on. Gurpreet actually mentioned this, where really AI is helping us to know early on so that we can change the outcome. So predictive analytics or AI is not just about predictions, but also changing the outcome based on that prediction. So that's kind of the fundamental we have to remember. So very quickly, the challenges that we see in the large company is technology and operations. They have a huge technical debt. So how we bring new technology while serving the market at the same time. So AIG, for example, pay $150 million in claim every single day. So that is the amount of money they are pushing into the society every single day. So when they're doing that, but at the same time, bringing new technology, that's an enormously difficult challenge that they face. So that's why, what we call open architecture model. Oftentimes, these large organizations are building relationship with startups, a technology company that is solving one particular problem really, really deep. So that is kind of helping them. Small company challenges are mostly they do not have the resources to hire data scientists, people who are capable of doing all this. So that's where automated machine learning, DataRobot kind of products are coming into a picture, that it can enable a lot of more people to do the similar kind of work. So, yeah.
If I can just add one thing in here.
Go on, Jesse.
I think these are all fantastic examples, but I think it's also important to remember that AI and automation and ML, they don't get implemented in a vacuum. And I think really important to think about the points of interaction with individuals within the organization. I was speaking with a large insurer who's automated aspects of their claims management process using image recognition technology, and they were finding that their lower performing agents were providing more commentary into the system than their higher performing agents. And what you had here was a feedback loop in which people were wanting to demonstrate that they were still valuable in a changed process, but in fact, they were actually basically putting bad data into the system. And so over time, you were actually eroding the capability of the system because of some very sort of human concerns. And so I think thinking about the human as part of the change management process, really critical to actually extracting the type of value that you want when you start down the road of one of these projects.
Thank you. So we're going to ask the talent question around attraction and retention. So I'll look at Kirill from your Google background and Christine from ATI. So Kirill, when you think about attracting and retaining talent in what is a very hot market, what are the tips you could give some of us, and what do you observe?
Yeah, first of all, we observe a lot of interest in this space, and I think all of these graduate programs in big data and machine learning really took off in the past several years. There's a lot of people that I've seen who started in some kind of enterprise IT environment, and then they moved into the data function, after which they decided to kind of change their life and go and get a degree specifically in big data and machine learning. And I've seen that multiple times, which kind of indicates that there is a lot of interest in this particular space. Purely from the Google perspective, I think the way we attract talent is with the fact that we actually provide a lot of open source technology. So all of the things that I mentioned previously, whether we're talking about the Hadoop ecosystem, or we're talking about Apache Beam and Apache Drill, or we're talking about TensorFlow, they're all openly accessible. So people start working and playing with those ecosystems to see what they can actually do with the technology. So by the time they're used to all of these tools, it's quite easy for them to actually come to us and get a job because we work with exactly the same technology. So I think the fact that we are open to the world in a lot of areas where we work kind of enables us to be universally attractive to these young candidates.
And Christine, from your perspective?
Yeah, and on the supply side, what we're doing is forcing these researchers, these postdocs, these mid-career researchers, even very senior fellows, to interact with each other across the boundaries. So, you should see our office space. It's open plan with, mathematicians next to philosophers, next to statisticians, next to computer scientists. And when they don't like it, they go, hide in a room somewhere. But for the most part, it's really actually about, those boundary crossers are going to be the most valuable. And so, when you work backwards through the educational system, like you said, you're seeing these programs, these kind of conversion courses. Good analytical thinking comes from lots of different disciplines. And there's a need now to cross those boundaries and pull people of all kinds through that. I would also say that we should be really careful about not producing those junior level analyst jobs that are going to be automated away. That 80% of data wrangling that's happening, and those kind of armies of kind of low level, please don't do that. We're working on artificial intelligence for data analysis, for data analytics. We would like that 80% of the work before the model building to get taken away. Please work on, and we're doing this too for you, but please work on those people that can understand the business and then are conversant in the technology and can bring those groups together, because we'll all be better off if we do that.
So very consistent sort of thinking there. So the question that I'm thinking of, I have a 5.5 and an 8.5-year-old. So I'll ask each of you if you could give them a career tip on what they should be doing. What would you say?
I mean, the arts.
The arts, okay.
Yeah.
You stole my answer.
I mean, human endeavor of creative arts. Yeah.
So yeah, I think in the future it's going to be either something that is very kind of human, either arts or some sort of performance, writing or whatever else it may be, or something deeply technical and analytical. So if we're talking about machine learning, it's not just that technical role of a data analyst, but it has to be a role that sits between different branches of business, sort of between technology and the actual kind of decision making, because that is not going to be automated, at least not easily, right? You can automate number crunching, you can automate the algorithms, but you can't really automate that link between what business needs and what the tech provides to you.
Mm.
I think that if you'd asked somebody 40 years ago how they should prep for their career, they would have told you that you should go into plastics. I don't know that that's the right thing to do anymore. I mean, I think that fundamentally you have to train for adaptability, you have to train for resilience to change, and that figure out a way to be happy, constantly reinventing yourself.
Yeah, I kind of agree with that actually. I think our generation is all about continuous learning. Right? So that used to be the case only for the doctors, only for certain professions, where we have to continuously read papers and things like that. That has fundamentally changed. So what we are really applying today, we did not learn entirely in school. And things are changing in an exponential rate. We are kind of moving vertically, as World Economic Forum calls about it, Fourth Industrial Revolution. Things are changing in a dramatic fashion. So with that kind of environment, what we have to do, we have to really enable us to learn continuously, learn diversity from different kind of people. So that's perfect. What we have to do.
So last, I just want to say thank you to the panel. Thank you for your questions, and hopefully you found it an engaging discussion. Thank you.
Thank you.